Hi, this is Paul from globaltradingsoftware.com. This is a quick futures trading tutorial. I'm looking at four indexes here, the NASDAQ, the Russell, the S&P 500 and the Dow Jones. Basic charts, normal candles. I've got the range breakout trading indicator, the xBrat range breakout trading indicator. I've got the manager and I've got the bias depth heat map. So I'm going to go through why I only traded the Dow this morning, why I didn't trade the others, because that's the part of trading that a lot of traders don't get. Find the reasons why you should not take the trade. If you can't find any reasons, you take it. It's about following rules. So with the YM, we had the opening candle, the 15-minute candle. The bias of the opening range was defined by the trading indicator as green. We defined the range, we also defined it green. So we're looking for a long, but we need confirmation. Signal, confirmation is the bias depth heat map. All 6 time frames are green. So we've got signal confirmation. We enter a couple of ticks above and we're still in that long position. More importantly, why didn't we trade the others? Let's start at the top left. So we put an order on for NQ because we got a bearish bias on the opening range. We got the 6 time frames on the bias depth heat map all red. We put the order on. It didn't take it in the first 3 candles. We cancel the order. Simple as that. That's the rules. Didn't get that opening range break. With the Russell on the top right, we got a bearish bias. You see it's colored in red and the tag's red for the opening range here. But look at the bias depth heat map. We got a bit of green, bit of yellow, some red, yellow. We are not, there's indecision there. There's neutral, which is yellow, bullish, green, bearish, red. So there was only order we could put on is short there, but we did not get the confirmation. So there was no order. With the ES bottom left, we got a bearish bias again, indecision doji. We're looking for the short. Did we get the confirmation? No. We were neutral at the top, neutral at the bottom, and then 4 red in the middle there. And again, it broke out to the upside. No trade. Follow the rules. So we're in YM only, and that's the important thing here. We've got 4 opportunities each day. 1, sometimes 2 will present those opportunities. Right now we are in this. How do we manage this? So there are one of the things I'm making this video for is I've got an apprenticeship program starting next year, and I've just actually gone through the whole month of training for the range breakout. But very basically, if we get this opening range candle and our manager ribbon is red, we don't use that to manage. We go for a target strategy and then adjust the trading stop. So I'm going to do this very briefly. So we have an entry. We put that entry a couple of ticks above the high of that. Things cut in green. That's the entry. Okay, when it breaks there, it's a start line. We're in. Now we need to measure. We need to measure the first 50 ticks, which goes to there. Okay, so we have a rule with indexes. Let it break 50 ticks, then adjust the stop, which is below the range to begin with, just above the entry. A couple of ticks above the entry there. Okay. So that's now your stop. And I'm not going to go into every scenario now that's in the training course, but we are break even now. So there's opportunities now to then, when we get to certain other targets, so when we get to 75 ticks, okay, we want to go to lock in 25 ticks on the trailing stop. Okay, that's one scenario that we're going to do here. So 75 ticks, we've gone through that just on this candle just here. So we're going to adjust the stop to 25 ticks now. So let's just measure that 25 ticks on here to make it easier very quickly. 25 is there. So at that point, I adjust the stop to 25 ticks. Now we wait until it gets to 100 ticks. So at 100 ticks, which is very close, so I'm going to put that line on my chart. Whoops. I'm going to put that white line on my chart and change it to white. So now when it gets to that and breaks there, we can adjust our trailing stop to 50 ticks. Okay, let's measure those 50 ticks and just put an orange line in there just to give you the idea. So this is just one scenario that we would do. Okay, there's 50 ticks. So let's put that in orange here. It's about being patient with these types of trades. Sometimes they will run. We're on a Friday after Thanksgiving. Okay, there's not a great deal of volume. It's been a fantastic breakout so far. We've gone through the 50, we've made it break even. We've gone through 75, we've put 25 ticks, we've locked in profit with that break even now. There are scenarios now, if it doesn't reach 100 and we start to see that volume drop off, we can be tight, going one candle behind. That's another strategy that I discussed in the apprenticeship program. But right now, this is where we are. We've locked in profit with 25. We've actually locked in profit just below this pivot as well, which is really, really crucial here. This is good. We know we could have a midday pullback slightly, but we wouldn't expect it to break that. If it did, we'd just take the profit and walk away. What we're interested in is a longer term run for the day if we can. So right now, I'm just waiting until it tips through 100 ticks. Again, it's a very slow day. So Friday, it's just after Thanksgiving. Sometimes this can go through 100 ticks very quickly. So what we have right now is we've got a potential when it gets to 100 ticks to put the trading stop at 50. Right now, we're locked in 25. We just let it run. And it's as simple as that. Again, out of 20 trading days in a month, some days you won't even get one on one of the indexes. Okay, you won't even get one trade because the criteria isn't right. So you follow the rules and you don't trade. Today, only one of them presented and met all of the rules. We found reasons not to trade the other three. So this is the one we concentrate on. This is the one we trade. So in the links below, you can check out, this is the TradingView version of the range breakout. And again, it's not just for indexes. We can use it for currencies, forex, currency futures. We can use it for gold, oil pit open, the gold pit open. Lots of uses for this to define that opening range, give it the bias. Then obviously with that bias depth heat map, very important for that confirmation. So I'm going to put the TradingView links for these trading indicators, these xBrat trading indicators, down in the description below, so you guys can go check them out.